Today we're going to discuss the evolution of the Chinese housing market in the 21st century. There is likely a housing bubble in the major Chinese cities, if not China as a whole. For the past decade, average house prices have been growing up nearly twice as fast as national income. In Beijing and Shanghai now, the property price to income ratio is almost twice as high as in New York and Tokyo. And a strange situation has come about in which there is both high demand for housing at the same time as an extra supply.
So, where did this come from? Well, the start of the 2000s saw strong economic growth in China, largely owing to manufacturing exports to the West. But the 07-08 financial crisis resulted in a big drop in demand for these exports. The Chinese economy, and in particular the housing market, which had until then been booming, suffered. To boost the economy, the government initiated a Keynesian-style spending plan, known as the 4 trillion. This was equivalent to around $600 billion. The majority of this funding was channeled into a colossal nationwide construction project, getting Chinese people back into work. To put the scale of this operation into context, in 2 years, China used more cement than the USA did in the entire 20th century. China can provide cheap labour and raw materials in great supply, whilst property prices continue to rise. This produced huge profit margins for construction companies. Major cities saw rapid urbanisation, first in central areas, but as this land filled up, hungry property developers continued to build further and further out of town. As a result, China developed a surplus of property. That is to say, there is now more accommodation than...
The obvious question then is, why did they keep building? Put simply, the demand was there and prices kept going up. There are two main reasons for this. Firstly, investment options in China are limited, and the stock market is both small and highly volatile relative to what it earns. But furthermore, the population has complete confidence that the housing market will continue to rise. Secondly, Chinese society is obsessed with house ownership. In simple terms, a man is expected to own an apartment, and a woman will only marry a man who owns an apartment. It is the difference between making it as a citizen and becoming...
So can the bubble burst? China is the world's second largest economy, so if the bubble were to burst, the consequences would be severe. Perhaps comparable with the US's and Japan's bubbles of recent history. But would such a fast adjustment actually be possible? Chinese policymakers are going to lengths to prevent a crisis. The general line is that houses are for living in, not for trading. Firstly, it's forbidden to sell a property within 3 years of purchasing it. Secondly, the government has raised interest rates to deter house purchases. Thirdly, a married couple is permitted to own only one apartment. Many get around this actually by divorcing on paper to allow ownership of an investment property. Finally, and perhaps most significantly, it is forbidden to create financial instruments to short.
To conclude, property appears to be significantly overvalued in major Chinese cities. However, the combination of China's cultural obsession with house ownership, its lack of investment alternatives, and the government's strict regulation indicates that the bubble is unlikely to burst dramatically. We may, however, see a gradual slowing of growth as the government policies take effect, coupled as well with a general decline in economic growth in China as a whole. All that being said, household debt sits at just 50% of GDP, compared, for example, with 85% in the UK. So perhaps there is still some room for the Chinese housing market to grow. Thank you very much, and I hope you enjoyed